Welcome to Energy Insights, the podcast where we unpack the decisions, challenges, and opportunities shaping Asia's energy transition. I'm your host, Stephen. Today's episode takes us beyond the negotiation halls of Berlin and into the economic reality behind what was and wasn't delivered at COP30. While most headlines focus on political clashes, fossil fuel languages, and all the final hours of drafting, there's a deeper question we need to answer. What do COP30's outcomes actually mean for finance, markets, and the economics of climate action in Asia? To help us understand that, we are joined by someone who has spent nearly 2 decades analyzing COPs, not from the sidelines, but from the economic and financial lens that often gets overlooked. Our guest here today, Wai-Shin Chan, Director of Research at Asia Research and Engagement, and one of the region's most respected voices on climate finance, sustainable investment, and the intersection between global climate policy and Asian markets. Wai-Shin has been following COP since COP13 in Bali and brings a uniquely structured, analytical view to how commitments translate or don't translate into action. Wai-Shin, welcome to Energy Insights.
It's a pleasure to be here, Stephen. Thank you for having me on Energy Insights. You're right that the headlines tend to focus on certain issues, the fire at COP30, the will they, won't they, on fossil fuels, the negotiation tactics of getting increases in climate finance, and so on. But outside of these COPs, realities can be quite different, and looking at them through the finance and economics lens is important because that's a key driver of where and how things can actually get done over the longer term.
Thank you, Wish. And let's set the scene to be more understanding about the economics of COP30. So first off, you've been following COPs closely for almost 17 years, even if you haven't physically attended one and whatnot. Before we get into COP30 itself, how would you get us through your role at Asia Research and Engagement, and how do you approach these global conferences from a climate finance perspective?
Yes, thank you. Asia Research and Engagement is a mission-driven organization, and our mission is to catalyze corporate change through investor-backed engagement for a sustainable and compassionate Asia. My work with ARE looks at the intersection between sustainability and finance, focusing on the transition of the energy as well as food and agriculture systems. That involves understanding how global and regional climate policy, finance, and economic signals shape things like investor behavior and corporate strategy. So we look at issues such as national transition plans and the guidance and adequacy or lack thereof of these plants, the financial risks of not taking action across different time horizons, the importance of governance, and how having the right structure can set the tone from the top and point everyone in the right direction. So when I follow COPs, it's about thinking how the big global picture might filter down in different ways to various stakeholders, economies, developed, developing, and emerging, industries, old and new, and communities, coastal, local, indigenous, for example. So at the back of my mind, I'm always thinking, what does this mean for finance, capital flows, climate risk, the price of carbon pollution? ARE is in Asia for Asia. So I'm also asking myself, what does COP30 and all these discussions mean for Asia, for its economies, for the companies here that are trying to plan for the future, whether that's the short term, 1 to 5 years, medium term, 10 to 15 years, or longer term, 20 years and beyond. COPs are quite chaotic, and out of chaos comes a lot of noise, protests, multiple draft texts, protracted negotiations, and a lot of press coverage, which is good, by the way, and various announcements, some of which are what we call blue zone from the formal negotiations, mostly binding, but as we've seen from COP30, some non-binding, all terribly difficult to enforce, as well as the green zone from outside the formal negotiations, most of which is voluntary, so that's based on peer pressure and even more difficult to enforce. Over the various years, some issues emerge as key sticking points, only to maybe be less prominent, not less important, I should say, but less prominent in subsequent years. But finance is always a sticking point, and it's always the key to unblocking and unlocking climate ambition.
Thank you, Wishin, for a very exciting status and then all these comprehensive summary that you have at COPs. So you've been tracking COP30 for this year very closely, if we understand it well. So what was the impression or immediately stood out to you this year?
Now, COP30 was taking place after or or actually I might say during a period of big geopolitical change globally. All the while, climate continues to change. So a few things left an impression on me and stood out. Firstly, more ambition is urgently needed globally as temperatures and emissions continue to rise. Yet it is elusive, as we saw from the disappointing climate pledges or nationally determined contributions that were supposed to be submitted with a ratchet in ambition by February. In the end, only 122 parties submitted so-called NDC3s, but they were mostly unambitious. I mean, taken collectively, it barely moves the dial for limiting warming at all. We're still on track for more than 2.5 to 2.8 degrees at best, and it is certainly way, way, way off track for the 1.5 degree target. It seems many NDCs were not really informed by the lessons learned from the global stocktake at COP28 a couple of years ago, nor were they willing to talk about it. This year's sort of will they or won't they, as I mentioned earlier, was the inclusion of a roadmap to transition away from fossil fuels, even the beginnings of a discussion for a roadmap, and that is a key test for ambition, or at least consensus on ambition. But no, this was not to be. Other things that caught my eye, finance. It certainly took a slightly different angle. It's clear that you can almost pull any number out of a hat to be delivered by some future time frame, but it's really about how it will be delivered. Firstly, there's still no formal definition of climate finance under the UNFCCC, so those giving will use very broad definitions, whilst those receiving, they will use much narrower definitions. Second is the before and after. Do you declare your finance before, that's ex ante, or only after you've classified it, that's ex post? Thirdly, it's about the mode of delivery, concessional loans, low interest rate loans, grants, public versus private, mobilization. So what happened this year was under promising and under delivering. So this is the 100 billion US dollars first discussed in 2009. It's supposed to mirror in 2020. It wasn't until 2022. The new collective goal, the NCQG, of 300 billion a year. Very few details on delivery of that, and no clearer roadmap towards an even bigger quantum of 1.3 trillion. Then we had a tripling of many things, of adaptation finance, of funds for the loss and damage situation. And that's before a doubling target was met. The frustration comes from setting ever higher targets, but not achieving or even coming up with a plan for how to achieve these. It's complicated because these are not small debates. They have the potential to change global financial architecture for decades to come. But finally, there was also a lot of noise on UTMs, or unilateral trade measures. There seems to be a concerted effort to get these mentioned in so many different negotiation tracks this year, even though they were not formally on the agenda. UTMs are things like the EU's Carbon Border Adjustment Mechanism, CBAM. Countries are using global mechanisms like the WTO when it works for them, but then they have reasons not to use it when it doesn't work for them. May I also mention a personal bugbear of mine, and that's the role of science is becoming even more political. Some are not welcoming science or committed to using the best available science for decisions. That's quite annoying because the gold standard here is the IPCC, and if science is ignored, how can we expect economic policies and social policies to work? From an economic perspective, when science becomes negotiable, that introduces uncertainty, and uncertainty only raises costs.
So when you bring this to Asia with all these lessons and negotiations from the regions outside of Asia, what makes COP30 such an important conference for Asia region?
Asia as a region is highly vulnerable to the impacts of climate change, not just the acute events, the storms, floods, droughts, wildfires, etc., but also those slow onset events, sea level rise, salination or freshwater, desertification. Yet Asian economies are also heavily reliant on carbon-intensive industries and the imports of fossil fuels. Now, that combination creates significant physical risks and transition risks as the region continues to develop economically as well as socially. So COP30 matters because it was supposed to be an implementation COP, a doing COP, and this has clear implications for Asia. Firstly, many of those NDCs in the regions have two components: an unconditional component, what they can do on their own, and a conditional component, what can only be done with access to climate finance. The regional needs are high, not just for mitigation and transition, but also for adaptation and resilience. Secondly, we have economic competitiveness. Asia is at the start of much of the global supply chain, so doing things in a high carbon manner brings complications when trade measures such as CBAM begin to expand and markets start valuing carbon more explicitly. How can Asia transition credibly but also competitively? Thirdly, the ambition level and implementation of global commitments. These are supposed to filter down to regional and national policies, and these in turn influence decisions that businesses make. For example, much of Southeast Asia still relies on coal or gas, and if there is weak language or no language on the transition away from fossil fuels, it means investors are less confident on the speed of the transition and the ability to support long term climate aligned investments. The cost of technology is then the primary decision, and that can often be artificially supported with subsidies, but that is a whole other topic. I do believe that Asia's development trajectory is deeply intertwined with its climate trajectory because inaction or slow action translates into external costs, health, infrastructure rebuild, livelihoods, and so on. COP30 was supposed to give clarity on whether the region can access the capital and move faster on climate policy. I'm not sure it achieved that.
Let's get into the heart of this, moving on to our second discussions about finance, markets, and economic meaning of COP30 outcomes. From your perspective, what did COP30 actually deliver, especially around the NCQG and adaptation finance?
If I could start with adaptation finance first, COP30 delivered some progress, but not much clarity. So we saw the new target of a tripling of adaptation finance, but we're not any clear on how it will be delivered, whether it's new or additional, how concessional it will be, or whether it would add to the loan burden of developing countries. On the NCQG discussions, they moved forward, but we're still far away from a concrete roadmap. The big headline numbers, as I mentioned before, 300 billion or even 1.3 trillion, they matter much less than the actual delivery, the structure of things, who provides it, in what form, how predictable is that flow. The idea is to create fiscal space, freeing up funds from inefficient, to put it generously, inefficient use of funds to where it might be used more efficiently for longer term sustainable returns, where the returns might come in the form of lower external costs as well as economic and social development. Money is supposed to talk, but we seem to get a lot of talk and less action. The discussions did not give much clarity as far as finance is concerned, and markets respond better to action than to talk.
Moving on to the commitments on this climate finance into capital flows, what needs to be done to happen next. So one of the big themes of your big themes is implementation. How do these COP30 commitments actually translate into real investment and capital flows?
Thank you, Stephen. For commitments to translate into action, three things need to happen. Firstly, policy certainty. Investors need to know that governments won't shift position when there's a change in government or a shift in the political winds. Investors require clear policy signals on things like a fossil fuel phase out, which can be delivered over different time horizons in different economies, but also carbon pricing, so tilting the economics that better reflect those externalities, and renewable targets that come with the supporting infrastructure, so grids, offtake agreements, priority, and of course the storage to deal with variability. It all requires proper planning through policy consistency. Secondly, maybe I'd like to talk about risk sharing mechanisms. Many Asian markets still lack de risking instruments, so guarantees, blended finance, stable offtake agreements, and these allow private capital to move at scale on projects and technologies that may, on the surface, appear to be riskier, but are not riskier if external costs were properly accounted for. Thirdly, transparency. Without consistent indicators on adaptation, resilience, and transition progress, It's difficult for capital markets to evaluate the risks and opportunities accurately. The benefits are also seen to be much lower or narrower. Now, COP30 made muted progress, although not everyone was happy, I've got to emphasize, on the global goal on adaptation and the indicators that should be used to assess this. Until these structural issues improve, pledges will only be pledges. Investors don't like funding pledges or and headline statements. They fund certainty, and they fund that with the appropriate frameworks in place.
Based on COP30's outcomes so far, what shifts do you see for Asia's economic and energy direction?
It probably wasn't a direct result or intention of COP30, but what will happen is that one, renewable adoption will continue to accelerate simply because they are increasingly cost competitive. The Muchirao decision recognized the rapid advancements, the declining costs, and the record levels of global renewables capacity. Asia is leading here. Uh, Two, fossil fuels and fossil fuel imports, they face growing risks, whether it's due to supply volatility, trade measures, or stranded asset concerns, whatever. COP30 didn't eliminate fossil fuels just yet, but did continue to raise the questions about their long-term economic viability. And that roadmap to transition away from fossil fuels was supported by no less than 86 countries that were named. Thirdly, adaptation is all the more important and will need much, much more capital to address it. For regions like Southeast Asia, climate impacts are real. They are happening now, and that means the costs are also current. The typhoons that have hit the region this year have been deadly and expensive, and it will only get worse as the planet continues to warm. So COP30 didn't rewrite Asia's trajectory. That's for Asia to decide, but it certainly laid bare the economic case for a faster, a more resilient, and a more inclusive transition.
So, out of all these shifts, which one, in your opinion or from your experience, more likely to happen as an immediate goals or long-term process still require?
The immediate goals are very, very important for policy certainty. So as I mentioned earlier, the feed down, so to speak, the trickle down on nationally determined contributions, the policies that are coming, I think are really, really important, especially as that creates the certainty, the transparency that is required for investors to make those decisions. They can't be sort of making a decision, a final investment decision to put, millions, if not billions of money towards things that may change or may not happen. What's the point in putting money and investments into renewable energy capacity, for example, if the grids in certain countries will not offtake them, if there are no policies in place to encourage or even force grid operators and operators like that to sort of transmit and deliver the renewable energy if they can't get anywhere? What we don't want is building a wind farm and having the wind turbines spinning for art purposes. They need to be delivering renewable energy to industries where it really matters so that we can decarbonize those grids, for example. So that's just one area of how the implementation is so important.
Thank you for the takeaways. Let's zoom in further for Southeast Asia. What do the outcomes of COP30 mean in practical terms?
In practical terms, Southeast Asia is at a critical juncture in its economic and social development. The region needs enormous investment for adaptation, for agriculture, water systems, coastal protection, and the livelihoods that they support, but also major investment in decarbonizing energy and energy related systems, so power generation, heavy industries such as steel, non ferrous metals, cement, and vehicles. The signals from COP30 were those of more pressure and risk on fossil fuel expansion, especially coal and long-term gas commitments. At the same time, it reinforces the need for regional cooperation. So shared grids, power trading, and harmonized carbon policies, something that the region can actually do very well, as we saw an announcement on the Asian Power Grid a few weeks ago. One area that I haven't mentioned, however, is critical minerals. For all the politics of these, they were discussed at COP30, but ultimately left out of the main decisions. Yet these are increasingly important to the region. For example, nickel in Indonesia and the supply chains that they come with, and the captive coal plants that are used to sort of run the smelters. By way of example, Asia really needs to leverage COP30 outcomes to accelerate renewables and improve governance, but also chart its own ambitious path to reduce vulnerability and enhance its competitiveness. If not, we in Asia risk locking in more expensive, higher carbon pathways, and that's bad for companies, it's bad for investors, and it's bad for the communities and societies of Asia.
About the lessons that shared governments and market learning right from COP30 from financial and market perspective, what will be the takeaway for governments and investors?
The biggest takeaway is that uncertainty and inconsistency, that's expensive. I mean, vague language on fossil fuels, unclear financial structures, inconsistent national policies, they all translate into higher capital costs. And these affect all segments of the economy, not just sort of investments. Another takeaway would be that transparency really matters, whether it's adaptation indicators, NDC tracking, or transition planning. Investors really need reliable information. Some 119 parties submitted their first biennial transparency report, but that means that many didn't. And it also means that we need quality and consistent data biennially, so every 2 years. So this is an ongoing process, one that has begun and that can improve, but that should not end. But finally, Asia's competitive edge will depend on readiness. Now, readiness to adopt clean technologies, the readiness to adopt and adapt to climate impacts, and the readiness to take new, or shall we say, different risks as we face new trade and regulatory environments. So, the simplest takeaway could be summed up in one phrase, and that's markets reward clarity.
As you look ahead to the next year, from all these takeaways, what trends or signals will you be tracking, watching most closely after this COP30?
Thanks, Stephen. We just mentioned clarity. The first thing to watch is the implementation of country NDCs, as I said before. Will they come with law changes? Will they come with coordination across sectors? Will different ministries be actually on board, or does it just come from the president or some head of state for show when he or she gets up on stage to discuss these things? Um, I would really like to watch closely how the roadmap for transitioning away from fossil fuels actually works, even if it's on a voluntary basis. The first international conference on this will be in late April in Santa Marta in Colombia. I hope that many Asian economies will go and be a part of this and discuss how to transition away from fossil fuels according to their own nationally determined basis, their own time frame, etc., in a way that works for them. But it has to be done. Let's get the ball rolling now. It will also be interesting to see the evolution of those unilateral trade measures. How will Asian economies respond to things like CBAM, the Carbon Border Adjustment Mechanism? There's a lot of talk on the creation of carbon space. For some countries, and I'm deliberately using no classifications here, some countries, they need to make the space for other countries to utilize the rest of the carbon budget. And that's where the science comes in shaping the policy, in shaping market confidence. And then finally, most importantly, arguably, back to fiscal space. Whether we see more transparency of climate finance and the development of concessional finance, either in formal negotiations like the NCQG or Article 9, and for those formal negotiations, the next stop is the bond intersessionals taking place in June. Um, or it could be informally because it's about meaningful structural change with appropriate frameworks in place, and it's not just about big numbers. So these things that I'll be watching will really shape the investment landscape far more than any single headline or big number announcement from COP30.
Thank you, Wish. And as we wrap up, would you have us your personal level or professional level takeaways for our listener today? You have learned from COP30.
It's don't be disheartened. I think that's very, very important. We can't sort of look at these things and what is on the surface always looking like a failure, we should continue to raise awareness. We should continue to learn more. We should continue to tell others. We need to take this home with us, family conversations. We need to take it to work with us, conversations with our colleagues and the work that we do, to school even. We need to be making sort of more conscious choices as well. I think COP is only 2 weeks of the year, which is when most of the world will focus on it and look in it. But we need to be making a difference for the rest of the year, not just those other 50 weeks, but the 52 in full and beyond. So carry on. We need to all work together because we are all in this together. We only have one planet, and whether you live in a developed part of that planet or a developing part of that planet, it doesn't matter. We only have one planet, unless you're going to move to Mars, which I don't want to make that journey just now. Thank you, Stephen.
Thank you for the very powerful message and takeaway, Wai-Shin. Thanks again for cutting through the noise and giving us economic lens on COP30 that is clear, grounded, and incredibly valuable. For our listener, as we have heard today, climate finance is not just about numbers, it's about structure, certainty, and whether commitments can translate into real outcomes across Asia. And for Southeast Asia, especially, the stakes could not be higher. Thank you for tuning in today's episode of Energy Insights. If you find this conversation helpful, don't forget to like, share, and subscribe to stay updated on the latest in Asia energy transition. For more analysis and stories, visit our website at energytracker.asia. I'm Stephen, and I see you next time on Energy Insights.